Hell is coming were the three words that halted the stock market back in 2020. And those same words generated an income of $2.6 billion for one man, Bill Ackman. In a doom-laden interview on CNBC, spooked financial markets, sparking immediate frenzied selling, and he may have greatly contributed to the stock market crash of 2020. Join us as we take you through the events that followed the prophecy of doom. Watch till the end to learn what a stock market crash means, what happens when the stock markets crash, and what causes a stock market crash. First, let's take a look at this clip from the infamous interview.
Because hell is coming, okay? Like there's a tsunami coming, right? The tsunami's coming and you feel it in the air, right? The tide starts to roll out, okay?
In the full interview, Bill Ackman warned the United States government was underestimating the severity of coronavirus crisis and the impact it could have on the stock market. He predicted that the looming pandemic would kill millions of people and devastate the global economy, after which he advised the President of the United States to declare a 30-day lockdown, which he believed was the only way to save the market. If we are being honest, from an objective point of view, Mr. Ackman's statements sounded like he had just had a bad dream, which makes it understandable that a lot of people did not take his warning seriously, especially since there wasn't any other gloomy forecasts at the time he made the statement. Moreover, it is not uncommon for hedge fund managers to try to generate anxiety in the markets just to drive down the share price of firms in which they have short positions. But whether by an act of God or by preceding events, things in the stock market began to take a downward turn. While Ackman spoke, the Dow Jones Industrial Average Index, already down 1,000 points the same day, went even further down, and that triggered the circuit breakers designed to halt any extreme crash. The market closed for 15 minutes and was down by more than 2,000 points when it reopened. That singular event saw Forbes magazine publish the billionaire interview that tanked the stock market. And even Nathan Michaud, founder of Investors Underground, took to Twitter to say Ackman just halted the market. But despite the obvious actualization of his warnings, Ackman's statements on the interview were criticized by figures in the finance world and was blamed for initiating the market's panic. Ex-hedge fund manager Michael Novogratz blamed Ackman for the commotion in the market and even went as far as to tweet, "Please get Ackman off CNBC before people start jumping off bridges." Stephanie Ruhle, a business correspondent on MSNBC, also blamed his wild, panic-inducing statement as the cause for triggering of the circuit breakers. She also criticized his public performance of his fears and noted that someone as rich, respected, and connected like him could have taken his concerns directly to the president instead of rousing panic on TV and social media. Amidst all blame and criticism, the Pershing Square manager said in his defense that the outlook for equities had changed in a material way over 5 days. Ackman stated that shortly after the events of his interview, the federal government, in collaboration with the US Treasury, intervened in financial markets in an unprecedented manner, and that Congress is on the verge of passing legislation to help bridge the economy, the country's workforce, and citizens during the temporary but massive economic shock we are experiencing. But the biggest shock came when Ackman revealed in a letter to his shareholders that he had been purchasing credit protection hedges, meaning bets on the market failing, since late February. And those hedges paid off big time. How big, you ask? Well, $2.6 billion big. While millions of people all over the world watched their savings dwindle, and more than 3 million American citizens lost their jobs in the weeks that followed, Ackman's deals netted him and his shareholders $2.6 billion, with 27 million in credit default swaps in such a little time. He made a jaw-dropping 10,000% profit from his investments, a feat investors have called the single best trade of all time. This time, the predictions were true, but keep in mind that not everything you hear, even from experts, is intended primarily for your benefit. They have their motives too. Thanks for watching, and I'll see you in the next one.